the other thing I wanted to talk about is a lot of people ask me, what do smart people invest their money in? Like, what do smart people, how do smart people invest, and what do they invest their money in? And my answer to that would be that number one, smart people invest in themselves. So that's the first thing I want you to think about. If you're going to think about investing, always think about investing in yourself. And how do you do that? How do you invest in yourself? Number one, by educating yourself, right? Don't be afraid to buy a course. Don't be afraid to go attend a class. Don't be afraid to sign up for a class at the university. That's one way to invest in yourself, to give yourself the knowledge that you need, even if you are working with other professionals. The second way is to invest in diversified portfolios, which we already mentioned. This could be stocks, bonds, mutual funds, exchange traded funds, and so on and so forth. Any type of investment, you always, 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 always want to think of the risks and consider the risks first, and think of the worst case scenario. If I put my money, if I invest my money in this type of a fund or in this type of an investment, typically there are analytical tools that you can use. For example, Morningstar has a tool that you can use that analyzes mutual fund portfolios, and it can kind of tell us, historically speaking, any given fund, what are the risks associated with that fund. There's a lot of technical data that you can look at, and it also can tell you in any given quarter, 3 months, what given the historical, the past. And obviously the past is not a guarantee of the future, but at least it gives you an idea in any given 3 months, historically speaking, in the past 10 years, what is the worst case scenario of this fund. It will tell you, let's say XYZ mutual fund has gone down as much as 20% or 25% or 29%. And it will also give you the best case scenario in any given, best 3-month performance was, this mutual fund was up 15, 20, or 25%. And again, you always want to look at the worst case scenario, because I'm sure everybody's happy when they make money. The question is, how can you stomach losing money? And you have to look at the worst case scenario and say, if I put my money, whether it's $1,000 or $10,000 or $100,000, if I put my $100,000 and this mutual fund drops 20%, which means my $100,000 becomes $80,000, can I live with it? And also, a lot has to do with your time horizon, right? So if it's a long-term investment, if you have long-term, typically equities, capital investments, stocks, mutual funds, they do recover typically. But if it's a short-term investment, if this money is for a specific short-term project, then obviously you have to be much more sensitive to the volatility of the mutual fund or any other investment that goes with that. So that's it for today. Today's lesson is about types of investments and risks associated with investments. Please put comments in the comment section. Let me know if this was interesting or if it was informative, if there's anything that, I may have missed or something that you didn't understand. I'm always looking for your feedback. So let me know. And also let me know what other topics you want me to discuss as far as investing is concerned or overall financial planning is concerned. And I will make sure to choose those topics for you for next time. Thank you so much for tuning in. Until next time, this is your host, Anna Bruno, from my channel, which is Get Skills with Anna Bruno. Thank you so much.